Howdy, Jacob here. Today we're going to look at Mastercraft Boat Holdings in the leisure products industry. 350 million market cap on 290 million enterprise value. Pretty small company. Growth has looked pretty great. I have seen that with a lot of leisure products where post-COVID, when people couldn't go out necessarily and do some things, um, they were spending money elsewhere, and we definitely see that here with huge growth in 2021, huge growth in 2022, and it was not due to acquisitions. So just a lot more people buying those types of products. And it looks like they design, manufacture, and market wreck power boats. Small company. Let's look at insider ownership, see what that looks like. 3%. So nothing substantial, not a lot of skin in the game, but that's just one of a few metrics to keep in mind when you're doing valuation. It's not really helping in valuation, but it's making you more confident that uh, the CEO, CFO, the board are going to do what's right for you as a shareholder, since they're also large shareholders. But 3% insider ownership, pretty small. 112 million in very liquid assets of short-term investments and cash and equivalents, with short-term and long-term debt just 53 million. So very safe balance sheet. Cash flow pretty impressive. So a little bit of reinvestment back in themselves. Made 2 acquisitions in the last 10 years. Otherwise, repurchasing a little bit of debt, paying down, repurchasing a bit of shares. And then it looks like increasing that cash balance, and then short-term investments, so reinvesting back in themselves have been a bit. So I think I'm ready to start making some assumptions here. Based on their growth, you might think that this is very small, but I have to balance out what they've done in the past with what I think they're going to do in the future. And with them having such growth in the last 3 years, I think that I wouldn't be surprised if there would be a little bit of a leveling off. And so I'll probably do something along the lines of 3 on the PE, or 3 on the revenue, 3% revenue growth annually. And then they are investing back in themselves, so maybe there's a chance they can get these types of returns. That'd be impressive. I'll put a little bit of a premium on the PE, price to free cash flow, based on their growth, which is relatively in line with the average company in history. And then for margins, do pretty close to average here. I like that. The free cash flow margin is a bit higher. Repurchasing shares, they have done that more recently. 25 million with stock-based compensation there. You're looking at 15. Yeah, I mean, they can buy back a lot of shares given their earnings here. So let's do 4%. All right. So it looks like I need to do some more research on this company and see whether these assumptions are accurate or not. I'd be intrigued to look at their revenue change perspective and price to earnings, price to free cash flow. So I'll try to do an in-depth video on them shortly. Hopefully you enjoy the video and have a great rest of your day. Thank you.